All right, traders, welcome to today's recap. This is Christian Primer at Strategic Trade Group, and it is Wednesday, November 2nd, Fed Day, Fed Volatility Day. I will keep this video, try to keep it a bit short because my nephew had knee surgery, so I want to go see how he's doing. He had knee surgery yesterday, so sorry, a little bit of personal news in the video, but I do want to do a quick video because, of course, the market action today, and what to kind of think about today's moves, to think about the Fed meeting and what Powell said. A lot of headlines with Powell speaking. I will tell you that I was a little bit worried about today coming into this meeting because there was too many of these expectations that you were going to hear something about the Fed that they're just not ready to say. So here's my opinion. I give it to you in every one of these videos. Videos are free, of course. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're talking about is for education purposes only. But yes, I will give you my opinion. And if you've been watching my videos the last couple days, right, I've been talking about what Fed fund futures are pricing in. Right, so people dance around like, oh, I think this is what's going to happen. Right. Well, we know what Fed fund futures are pricing in. That tells you, what the market is pricing in at this particular time. Things will change it. What the Fed says, what inflation, when inflation comes out on the 10th, the inflation data, the CPI data, right? That could change the way that the market is pricing things out. But we learned very little today from Powell, which is what I expected coming into today. He just doesn't have the information yet. If you've listened to what he said, as well as other Fed speakers, they want to get inflation down. He even said that they want to get inflation back to 2%. While I think that's very ambitious, because there's a lot of systematic and structural issues, which I'm not going to go into in this video because I gave a video to members talking about some of the structural issues with employment. So I'm not going to do that here, but it's very, in short, these things are very sticky to see employment go down. So he can't really make a lot of judgments until we get the inflation to go down. So 2% I think is ambitious, but that's what they say that they want to stay committed to. And I think as well, they don't want to backpedal on this because they already have put themselves in a situation with getting this wrong in the first place. So they want to stay committed to bringing down inflation. So you can't get inflation data. You can't get inflation data down without seeing what the data is, and you can't stop or pause the interest rate hikes until you get that inflation, until you get the inflation data. So why there was expectations of something else happening today, I don't know. The one thing that I said coming into today is maybe he's seeing something else in terms of some systematic risk. He actually addressed a little bit of that, and that was one of the new things that we learned. He talked about, and I think someone asked him the question about the stronger dollar. He said he's not worried about that right now, and that is built into their models. So that's not particularly, that is not particularly a good thing to hear that. Sorry, the screen would blank for a second. That was not particularly a dovish thing to hear, that they are looking at these risks, and right now they're not worried about them. So they can continue to think that they could raise interest rates because they haven't broken something. So again, either they're going to break inflation, and that is going to cause them to move down interest rates, or they're going to break something else. And they haven't broken anything else yet. There's been some stress in the market that we've seen, especially in the foreign currency market, but there really hasn't been anything that's been broken yet. So until then, it's hawkish, right? I mean, and we won't know more until we get the inflation data that comes out. Also, another point that I made earlier is that the next Fed meeting isn't until right before Christmas. Merry Christmas, everybody. December 14th, we're going to get actually 2 more data points of inflation data from the CPI. The first one is going to be the 10th of this month. And then the second one, I think, is right before this date. It's either the 12th or the 13th, but it comes before this. So they will actually get 2 more data points. Now, of course, they're not going to be in a vacuum. They're not going to be quiet. They're going to tell us how they feel every step of the way. But that's the situation. How has this changed? Not really much. It's still 50 basis points, right, for what they're implying. So again, today was 75, right? You don't see the November line in there anymore. I don't know why the screen keeps doing that. And then of course, this actually got worse, believe it or not. So for the February meeting, right? So it's probable that it's going to be 50, even though they're pricing 56. And then if you look at to the next meeting, it's not 25. It's actually close to, it's a possibility of another 50 basis points come February. So again, it changed a little bit by what Powell said. So let's go over the two things that are really important to watch right now, because the bond market is telling you a lot of what you need to see with rates moving. If you're an equity investor, you have to be looking at what interest rates are doing, right? So of course, the Fed, what we just talked about, the Fed fund futures and so on and so forth. This is the overnight rate. This is the short-term rate. But you could also see what rates are doing on the long end of the curve, which the Fed doesn't, the Fed doesn't directly control that. But it's good to know because it's a headwind for equities. The higher interest rates go up. So notice yesterday, we got up to the 20-day moving average and we failed here, right? Again, the trend has been lower. There's been no change in the trend. We've tested the trend a couple times at the 20-day moving average, but we failed. And we went lower again today. So there is some support. This is the new value area for the month of November. 119 is something that we're going to have to hang on to because I have a feeling that we're going to get back down into here. The other thing is, while the direction was lower for bonds, higher for rates, it wasn't a huge move today. So that's one thing that very small is a tiny win, that it wasn't a huge move. Now, this is bad. The dollar looked like, and I sent out a tweet earlier, of course I jinxed it. I didn't jinx it, but this was after right after the announcement of the Fed meeting, the dollar started to go lower, which is good. But look at how it closed. Right. So as soon as the press conference started, we got the whipsaw moves, and the dollar going stronger like this is not a good thing. Okay. What about so here's what the market did, right? Very similar to the last Fed meeting, right? Here's right, I put this out so that you guys could kind of see. Now, again, it's not going to be exact, but the takeaway here is, is not to look for the exact same type of price action, but not to get fooled. Right. I was referencing a couple different songs today, but I think, who is it? The Who? We don't get fooled again. You shouldn't get fooled on Fed days, right? Because the price action after at 2 o'clock, when the initial decision is released, it's really the press conference that really the information comes in, right? So look at it. Right? So you got to be very wary, and of when we rally like this, and Powell hasn't even started to speak. So what did I do? I took profits, right? Smartly. And I didn't take off all my trades, but I had a trade on in Berkshire. I had a couple other trades. You could see that I actually took 2 targets right at 202. Not even second guessing the price action, right? Just taking the move and understanding that it probably wasn't going to. We have so much more of a day to get through, and I took targets here. Unfortunately, I didn't take everything off here because, again, I don't know what Powell's going to say, and I figured that there will be some whipsaw move, but I didn't know that we were going to take out the lows like that either. Okay. I also put on a trade, and I'll send out this trade that I sent to members. We line this up. What I like to do a lot in the trading room at Tribeca Trade Group is do a scenario analysis. What happens? What are the technicals telling us, and what could possibly happen? And this was how I set up this trade for here. I put it in up here. Right. And I also reduced risk going into the meeting too. Right. I'm short a little bit of coin. I had a little bit of SQQ on from yesterday. I took that off because, again, I just don't want a lot of risk. So I had my low cost trade, which is an IWM put fly. Look at how we measured this up. Right. they were expecting the implied move was about, the options were implying for today, options that expired today were implying about a 2% move. So if you look at the 1 hour chart, we had already drifted into the value area before the Fed meeting started. Notice the whipsaw, right? But the 80% rule was still in effect, and we actually went all the way through to the bottom of value. Again, the 80% rule, if you're not familiar, but this is using value area studies. And once you break into the value area, when you haven't established yourself yet, there's an 80% chance that you go from one side to the other. I thought this also looked like a possible head and shoulders, and the top of value was a neckline. So I thought, you know, I told members today, I'm like, watch for a break into value, because this could kind of accelerate to the downside. So there it is. I mean, move to the downside. Now, when I measured the trade out, 2% down, was very close to the bottom of value. So again, I went over this precisely in this YouTube video that you can find on my channel. I did put it out publicly. I went over this at about 1:30 today, and that's how I constructed this trade. So again, I talked about a lot of different conditions. I talked about how I wasn't looking for much out of Powell, and I was more worried about the downside than anything else. That's why I constructed this trade. It worked very well. I ended up taking this trade off for $1.10, paid 33 cents. Now, full disclosure, this is a hedge. That means there's a couple other things that if this trade worked, I was going to lose out on a couple longs. So I took off a couple of trades that I had for earnings, right? You could see all my trades, full disclosure, as I always do. You know, there's some winners in there. There's some losers. I could tell you this was my end of day comment, you know, where this is November 2nd. My idea for today was just not to have today really define your month. It's too early in the month. We've got too much going on. This dip, because I don't think we really learned all that much today. It could be a buyable dip, right? Because again, there's nothing really that we learned differently coming into today. Maybe the market expectations were wrong coming into today. That's possible. I think that we need to hold 3790 in the S&P. Notice also that we lost the 50-day moving average and some of these shorter term moving averages. So I've got to see this hold first before I start to commit more capital. For now, I took off the majority of my exposure today, and I even have a little bit of SQQQ on, which is a short, leverage short on the Qs. And we'll see how that goes. If we manage to hold in here, then I will reassess and we'll look at possible longs. One of the things that I talked about coming into today was that there's a lot of strong earning names that have gotten extended. So let these names come in a little bit. Right? For example, a PI, right? Or an MDP. Sorry, that's the wrong. I'm thinking of, is it MDP? Is it M? I got the wrong symbol. Sorry about that. I'm thinking, is it MEDP? Yeah, MEDP. So let some of these strong earnings names, which is where I'm probably going to spend a decent amount of time, you know, trading some of the stronger names, some of the names that reported really strong earnings, but they're really extended. You know, even like a Goldman, which even went up further, right? All the energy names have gone up 12 out of the, the energy ETF XLE was up 12 days in a row. So let these things, like, let this come back in and check back in, right? So again, there's not going to be, you know, opportunities to trade everything to the long side. There are a lot of very weak areas of the market. They keep reloading and rolling. A lot of this, I see a lot of big puts in the FANG names, Amazon, Facebook, Meta, right, where they're rolling out huge put exposure. So these names I don't think are done going down. There's no evidence of that. This looks like a full-on breakdown in Amazon. So this is, you know, there could be more opportunities on the short side in some of these names that are going to be further unwound, in my opinion, you know, which had poor earnings. But there will be opportunities on the long side too, right? I still think that there could be a nice trade in maybe long IWM, short Qs, but we'll let to see this market kind of digest today first. All right, guys, so that's it. Like today, if you played today correctly, and if you were, you know, if you were nimble, you could have made money on both sides of the price action today if you wanted to do that, if you wanted to participate. If not, if you didn't want to trade today because it's too volatile, I hope that you're in a good spot and kind of been listening to understand that today is not a day to risk a lot of money. It's these Fed days are just too volatile. So if you're like me and kind of been following along, then you're in a pretty good spot, setting yourself up for this month. I'm essentially flat for this month after the first 2 days. I had some winning trades. I had to take some trades off for for some losses too that got stopped. Especially names that are coming up on earnings, like BTU. Unfortunately, I didn't get to work because it didn't break as I wanted to see it higher, and it reports earnings. Notice it failed here. So again, you kind of start scratch for the beginning of this month now that the Fed meeting is out of the way, and we'll see what kind of price action we get. All right, guys, have a great night. See you tomorrow.